11, 12, 13. Welcome to the Friday, June 18th weekly trading show from 13 Market Moves. 6/17/2021. David Tepper says the stock market is still fine. Kramer. Well, David Tepper says the market is fine. It must be fine. June 18th, 2021. The market is down 533 points. Let me give you another time frame. Let me give you another point of reference. 5 days ago, 13 market moves. Big drop in 5 days. We've nailed it, guys. We've done with most, actually, fuck it, none of the most prominent hedge fund managers have been able to do in years, and that is nail the market crash down to a day. So for those of you naysayers, 13 market moves doesn't work, well, fuck it, go watch this video right here that was posted exactly 5 trading days ago, warning you about the big drop in the markets today. Now, in this particular video, we've called June 18th as the day when the market was going to begin its downward trajectory. And if you watch this video, it's going to tell you precisely for how many days this downward trajectory can actually last. Now, at this point, let's talk about something fun. Who cares about the market crashing, Bitcoin crashing, right? Unless you're a short seller trying to make a fucking killing. But you're going to get to that a little bit later in the video. And for now, before we're going to tell you exactly where the market is going next week, because I'm assuming you're watching this video because you do want to know how the hell to trade the market next week. What the hell to do next week? Leo, should I short the hell out of this market now? Damn it. Hold on a second. I told you 5 days ago the market was going to begin crashing today. Now you want to listen? Where the fuck were you 5 days ago? Moment of silence for those of you that missed the drop. That should be a good point in this video for you to click the link below and take the 13 market move scores. Just click the damn link. Don't make any excuses. Let's roll. By the way, let's start with something fun. Talking about the 30x trade of the week. 20x plus, depending on your entry, guys. Yesterday. And you're going to be like, what the hell is this? Well, let me show you a time frame here. Let's switch it to 2 days, 2 minutes, right here to show you exactly what's going on here. So yesterday we were buying these 230 strike puts on WLTW, baby. That's right, at 25 cents a piece. And you may be thinking, well, okay, what's the outcome of that trade, Leonardo? Because I took your Leonardo trade and that shit got fucked. Guys, can't be just taking one trade expecting things to be perfect. Guys, I take a lot of fucked up trades, and the bottom line is for you to nail some of these 10x, 20x, 30x trades. That's how you can grow your account exponentially. So talking about these trades right here, guys, it was a 20 plus X trade. We're buying these puts yesterday at 25 cents, adding at 30 cents, adding at 35 cents per contract. At some point today, we were cashing out at 1,300%, 2,000%, in excess of 2,300% when we were hitting the low of 224.39. Guys, that is 20x plus within 48 hours. WLTW. What the hell is that, Leo? Never heard about that. No? Shit. It's because you're probably listening to CNBC, Kramer, and Tepper, and all of this bullshit that's not going to put any sort of 20x or 35x trade in your pocket. So apparently, if you're paying too much attention to the news and you're neglecting the chart, guys, step number 1, take the charts divergence course by clicking the link below this video. Second, sign up for a coaching session here at 13 Market Moves. You wouldn't hear nowhere from CNBC about a trade like WLTW. You've never heard about this ticker in your life. The truth is, you would have never heard about it until you watch this video right now. What is the outcome? The outcome is, you watch the CNBC, they don't know what the fuck is going on. They're not looking at the charts. They invite a bunch of fancy people to talk about what's going to happen next. Well, these fancy people manage billions of dollars. They're not going to try to take your account from 2K to 20K. I mean, these guys have a totally different management style. These guys have a totally different trading. But don't miss out on no fucking 20x trades like this one right here. And the only way you would know about these trades, guys, if you sign up for trading with a coach at 13 Market Moves. So take your action right now, because next week is going to be wild. It is going to be wild, wild west in the markets, because so many different people, so many different hedge fund managers have so many different views about what's about to come next, and that creates an insanely profitable opportunity for those that pay attention to things like WLT fucking W. The historic analog, guys, let me review that with you real quick. We pointed out in the last video 5 days ago that the market crash was going to begin when? On the 18th. Today is the 18th. Now, notice what happens next. 21st, when Monday opens up, as you notice, it's not a green candle, opposite to the general belief. As a matter of fact, the next day is not a green candle, and the third day after that is not a green candle. We don't get a green candle until the fourth trading day next week, which is some stolen out action. Now, in the midst of this is the sort of territory a lot of traders get killed. They're like, oh my God, it's bouncing, I should get out. And then when the shit drops and they own calls, I'm like, oh my God, I should have bought puts. And anyways, a lot of trades get fucked up in this sort of environment. So timing your entries is key. And guys, I'm not going to say I'm a saint. I get a lot of trades wrong. But what makes me right is the fact when I get my shit right. And when I nail this 10x, 20x, 30x trade. Cashing out, setting money aside, guys, is what we teach here on 13 Market Moves to any trader that comes on board. So if you are sick and tired of locking in this $100 a day bullshit, $500 a day bullshit, guys, the market gives you an insane opportunity. Look at this chart. I mean, this is not the time to be buying the damn dip. This is the time to learn how to short stocks, which is exactly the reason why you should take our Charts Divergences course. But enough of the courses, enough of this. Let's focus on the chart. Well, damn, I guess you would need to take the charts course to be able to focus on the damn chart. So click the fucking link below. Anyway, 18, 21. These are not the lucky numbers for the bulls. These are the lucky numbers for the short sellers. Congratulations. If you've shorted the Bitcoin with us in the last couple of days, congratulations. You're up over 500%. And damn it, if you don't know how to short Bitcoin and make 500% when I broke down the damn historic analog to you, this is your wake-up call. This is your wake-up call. Turn off the fucking TV and take our courses that can help you. Now, they're not guarantee you're going to make every trade perfectly, but what they are going to do is get you better. They're going to get you to a better place. You may not be able to read the market transparently like I am every week or every other week, but when you do and you get that ability, nobody can take it away from you. So what's in the cards, Leo? We're still going to 25, 27K on BTC. That is exactly what you should be paying attention to. Tomorrow's the 19th and the 20th. Bitcoin is likely to make a subsequent moves lower in a fashion to the magnitude of about 9 days lower, which is going to set a low at about 25, 27K. Count 3 days from that is when the market is going to set a low as well. Now, this is a huge move in the market. Guys, we've calculated in the past about 13%. 13% based on the historic analog. Again, we predicted that when 5 days ago, not when fucking everybody's going to start talking about it today and tomorrow and Monday when shit is crashing. We pointed out to this circumstance in September. God damn it, it's not September. It's, we pointed out to this catalyst in January of 2018. This gap right here that you see on this chart, this very chart, guys, it's the exact same circumstance that's being repeated in the markets right now that dictates a 30% drop. That's exactly what happened in January of 2018. And you may be wondering, well, what makes you think that, Leonardo? Because I'm bullish as fuck. I've been brainwashed by CNBC and Bloomberg and a bunch of other fucking channels I'm subscribed for. What makes you so bearish at this very instant in time, Leonardo? I'll give you a very simple answer. It's a historic analog. And it's the 13 market moves sequence, which is highly bearish. I don't want to scare the shit out of you right now. I'll do it in a moment. But this chart right here is something you should print out and post it on your fridge, damn it. Because this right here is what's about to happen to the market. While what? Everybody's so highly bullish. David Tepper, market can do no wrong. It's absolutely 100% fine. Kramer says, I love what David Tepper is saying. He must be right. He is, oh shit. He is wrong. What am I going to say on the Monday show? Fuck. Okay, so until that happens, guys, what you want to do is pay attention to this pattern right here. And you want to pay attention to the catalyst. Well, the catalyst of this huge drop back in 2018 was what? Oh, no. Now, I know some of you were 14 back then, so you may not know what the fuck is going on. But for some of you that are 40, 50, 60 years old, there's no damn excuse not to understand why this drop happened. And if you don't know, that is exactly why you should work with a coach here at 13 Market Moves. What was the catalyst? Type in your answer if you know it, damn it. Type it in. You can't be missing opportunities like this in the market. This right here was happening due to the fears of inflation. Say what? In 2018, Leo, they were fearful of inflation? Well, aren't they? Well, oh, fuck. I get it now. The Federal Reserve just admitted for the very first time ever, after ignoring the inflation, but I guess they couldn't ignore fucking oil going from minus 42 to plus 72 in 12 months, so I guess they had no choice but to say, yeah, we're seeing a little bit of fucking inflation here, a little bit higher than we thought. Can you see that shit? Guys, that's what's going on. I mean, at some point you can masquerade all the numbers. You can say there's no inflation, there's nothing. But I thought they were going to be able to get away with it. But oil just kind of ruined it for them. They couldn't no longer say, well, there's no inflation. Oh, and the inflation is our target. But they're fucked. The Fed is fucked. So when there was a notion that the Fed was fucked, right here, that's what happened. And basically, if you're a trader and you see the resemblance in current circumstances, you could easily reason a 13% drop. Now, you may be questioning, why 13%? Does it have anything to do with the 13 markets move formula? The answer is no. It just happens to be so that if roughly you take the drop in 2018, January 27th, you count 9 days to the lower point right here, it happens to be about 400-point drop in S&P. If you take it in percentage points, it ends up being 13%. So, which by the way is a Fibonacci number. So, if we go take a deep look further, VIX. Oh, Leah, VIX is bearish as hell. What are you talking about? VIX is a bearish chart. Until you go and examine the chart of VIX right before this time frame when the market does this. Well, apparently VIX was bearish right here. No shit. The market's been going higher and higher and higher forever and ever and ever till death part, which it did right here between January 27th and February 9th. It appears that we've got a divorce situation in the markets again right here. If you focus on this part of the chart right here in 2018, guys, you will imminently see that there was such a phenomenon as the first white candle. Okay, first white candle. After things have just been dropping and dropping and dropping, you get the first white candle and you get a little bit of a stall out action. And what do you get from there? Look at this, guys. I'm telling you, you're trying to learn the market, you better pay close attention to this damn chart right here. White candle, look at the magnitude from about 12 to 15, but after that, it's history, guys. It goes to 50 fucking 5. 5. Happens to be a Fibonacci number, by the way, as well. So, and then we drop, we max this out again, we drop. This is the COVID crash, and so this is where we are right now. Now, I was actually making these slides a day ago. I meant to record them. I ran out of time, but at least I'm doing this today. If you pull up the chart right now, it's probably going to have another white candle right next to this right here. I think VIX ended up in the 1920 area today on June the 18th. But this is a snapshot, as you can see, from, actually, this was the 16th. So I was making these on the 17th yesterday. So basically, you'll see the first white candle. And if we were to run this back to this time frame right here, we can easily see an explosion in the VIX all the way up to the 55 level. 55. We're at 20. We're at 1920 on the VIX right now. So there's such a phenomena, and it's not racist by no means. Okay? I love people, period. Any race, any color. But the first white candle refers to the fact that stock charts, okay, they put these, what would normally appear on your screen as a green candle, they put them in white. So green candle, imagine this is a green candle, or what we call a first white candle phenomena, which goes nicely with our analog of black candles. So we've got white candles and black candles. So oftentimes the black candle reversal, such as this, will represent a downward shift, and the first white candle will represent an upward shift or a trend reversal opportunity in something. In this particular case, we're looking at the VIX. So imminently, we think the VIX will shoot up to a 40, 45, 55 over the course of the next 10 trading sessions. And the market is just not ready for it. The fact that David Tepper and Jim Cramer are talking about how complacent the market is, how great of a job. Oh, the Fed is doing such a good job. Oh, the Fed. Oh, Powell is brilliant. He don't fucking pay attention to anything. He's so brilliant. Okay, when you hear comments like this, guys, it's time to pay attention to the first white candle. Pay attention to the first white candle, damn it, and you will win a lot more trades than you think you will. So, whoa, that was unexpected. I'll pretend like I did not see that, Leonardo. That is ugly. I'm telling you, I'm unsubscribing from this channel right now. I can't believe this. 36.50. Look, I understand. We're dipping lower a little bit. I get it. But 36.50. Well, guys, 36.50 just happens to be 13% under recent highs. So this is, I know it sounds a little bit out there because we haven't been there in so long, but it's nothing extraordinary considering the markets. And I guarantee you when we hit 36.50, guess who will be interviewed on CNBC? David Tepper. He's going to be out there. He's going to be like, I am buying the dip, damn it. Well, the question is, okay, if you thought David Tepper, if you thought that the markets were fine at 617, okay, and 10 days from now you're going to be buying the dip at, I know most of you think I'm fucking crazy, but it's all right. I've been right so many fucking times, it doesn't bother me if you think I'm wrong. Because ultimately, I'm proven right in most of the cases. David Tepper, 617.21. The market is fine. David Tepper, 627.21. I'm buying the dip. Watch it in the news, guys. It's about to happen. Which, by the way, David Tepper is awesome at nailing the bottoms. He done it. Actually, I bid him in 2018, December the 24th. December the 23rd, sorry. The market was crashing. I've nailed the bottom in Amazon about 15 minutes before he did. So, he's a great trader, but this three-pointer is on 13 market moves, guys. 36.50 in 9 to 10 trading days. I know it's shocking. I know you're not ready for it. I know some of you don't want to fucking hear it. Trade it. Trade it. Don't marry it. Just fucking trade it. Well, the perfect explanation for 13 market moves outside of the charts boils down to a highly bearish pattern, 6, 3, 9, 12, 3. That was predicted yesterday. By the way, if you look at this chart, I've made this chart on the 17th. I pulled up the data from June 16th. And my estimation was the fact that we're going to break down below 41.77 level in S&P. And if you were to pull up the charts today on June 18th, I mean, we're there. And so the analogy here, for those of you that are really trying to understand, is once the market breaks below a key level, which in this situation would be the blue line, it has an imminent opportunity to follow through on that break lower, as in certain instances like here. And this is not a small move, guys. This is a move from 38.50 down to 37.50. This is a 100-point move. So don't be shocked if Monday the market opened up 100 points lower. It wouldn't be a shocker at all from these current levels right here. Actually, that wouldn't even be a big deal at all. So 13 market moves, deadly sequence, 6, 3, 9, 12, 3. This puts us at a very high probability of a gap down Monday. And we're going to break down some specific stocks and charts for you in just a second here. But understand that overall, this sequence is highly bearish. The closest analog going through the last 5 years of 13 market moves, we're able to nail that or come close to in December of 2018. If you pay attention to this week, which happens to be the week of the Federal Reserve announcement, we had a sequence of 3, 6, 9, 3, 2, and Monday was a 3. Then we had a Christmas and the market started bouncing. So now consider this situation, this sequence right here. Even the dates almost match. It was the 17th of December, 18th, 19th, 20th, 21st. Got very similar numbers, very similar dates, different month. It's the month of June now. But the sequence is almost an identical match to this, which gives us a high probability of a downward move. And if we were to look at a historic analog, guys, I mean, it points to multiple days lower. So let's go back to this historic analog. Let's check it out. So we're basically right here. We're at the very top. We're expecting multiple days lower, not without stalling out, not without the bounces. What would we do when we bounce? What would we short the market? Now, let me bring another perspective to these market analysis, because at this point, those of you that have followed the channel and you put your trades 5 days ago and you stuck with them, congrats. You guys are banking. For those of you that took the trade and jumped the hell out, shame on you. You should have clicked the link below and signed up with the coach a long time ago. Guys, this is not a joke. This is serious business. There's going to be fortunes made in the next 7 days. And I wish for you to be one of the guys that's going to make a fortune. Not for one of the guys that's going to listen to this information and fucking Monday do nothing about it. And I certainly wouldn't want you to take this journey on your own. That's why you should be clicking the link below right now. So you can talk to us, so you can take the appropriate action. So by next week, you can pay off your house. Now, with this type of scenario, I mean, it's clear that we're going for another substantial move lower in Bitcoin. The market is about to make a substantial move lower. The question is, where do you target your entry? If you miss this week, if you're going into next week, where is your best entry? I mean, that should be the question. If you're a trader, you know, if you're not a market observer, if you're actively engaged in the market, your question should be, where do I enter this trade? And because this would deserve a video of its own for a couple of hours, I'm not going to give you the answer right here, guys. I want you to get in touch with a senior trader here at 13 Market Moves. Describe where you're at. Describe, you know, what are some challenges you're having when you're trading, so we can try to help you take advantage of this next opportunity, this next trade, this next big short, guys. It's coming up. For now, let me bring you to the next picture here and break down some of the market perspectives that we're seeing. All right, so let me give you some definitive answers that to questions you probably got in your mind right now. So the question of the day is, Bitcoin still going to drop? Well, guys, without changing anything, without even subscribing to stock charts, you can go in, stockcharts.com, plug in $ BTC USD, pull up the daily chart, and what do you see? Guys, you don't have to have any special skill. All you have to do is observe some key characteristics of the chart. I mean, we're heading for a death cross. This is not a joke. I mean, this death cross right here, guys, is before we even adjust for our proprietary 1355 cross. So let's go ahead and change that to give you a better perspective of what's really going on here with BTC. So let's update the chart, and you can clearly see that this cross has formed a while ago. And so shorter term indication, because what I've really done right now, I've switched the 50-day moving line to 13, I've switched the 200-day moving line to 55. You get a really better picture that, look, this short-term move is reflecting onto the longer time frame of the moving averages, which generally points to a drop lower, not higher. So clearly, I mean, when Bitcoin is bouncing to a level of 40,000, you know, everybody's screaming. Everybody's just trying to ignore the videos that we've posted saying, hey, there is a bigger drop coming. So all the traders can focus is this moment in time right here, while Bitcoin is breaking out higher on what? On some really fucked up news. Basically, Elon Musk is saying, oh, we're going to start allowing Bitcoin again to purchase Teslas. Well, who gives a shit at this point? He's fucked up his credibility. First he says we're going to take it, then we're not going to take it. He speculates we're going to take Dogecoin, we're going to take fucking, before you know, he'll be taking tulips for it. And basically, I mean, this is not a bullish move by no means. At this point, every time he's going to tweet something, it's going to have less and less impact. So if you're relying on Elon Musk tweets to move cryptocurrency higher, you're Alice in the Wonderland, because that shit is not going to happen. It can have a short-term impact, but it's not going to have any long-term impact in any Elon Musk tweet, just like Donald Trump tweet back in the past, dating to the China trade. Anytime Donald Trump used to tweet, oh, we got a deal. Okay, all you had to do was short the shit, and it would imminently come down. So it's the same type of situation with Elon Musk tweets. Okay, you cannot be taking them seriously. You should be using them as an opportunity to short the bounces. So that's what the chart portrays. You should stay with what the chart tells you. And it's been a pretty solid indication here of how to trade this. This has been a really, really easy trade, guys. If you haven't been making a killing on this Bitcoin trade, guys, you've got to take action right now and get in touch with us at 13marketmoves.com. Now, guys, this was the point where most of the traders, right, I mean, everybody's been bullish as fuck right here. Oh, buy it here, it's going to 100K, 500K, 1 million. I mean, nothing changes in the history. Everybody gets fucking excited when shit goes higher, which is exactly the easiest time to be excited about something going higher, but then it drops. And so what are you at this point if you were one of these guys right here that were buying at the high levels? Well, you're hoping, you're praying that shit will bounce. You're hoping that shit will go higher. And so finally you get the bounce and you're like, damn, I was right. Okay? And so you get this moment of happiness for a brief moment, and then shit drops. And to no surprise, right now they're sitting and praying that it's going to go back up. And if it goes back up 1,000 points, they're going to be celebrating again. I knew I was right. It's going up, man. Before you know, it's going to be at 46K. 46K says the guy that left a comment on one of our videos who said, oh, it's never going to drop below 47. Right now, he's praying that Bitcoin would go back up to 46K. Now, if you're a trader, just ignore all this noise. Just ignore it and focus on the chart. And we're putting together a crypto course, guys, which is super easy, guys. It's going to be super, super affordable for everybody to take it, because I think it's just such a great timing for everybody to trade this stuff and make a ton of money. So look out for our crypto course, specifically trading Bitcoin, because some of these moves in Bitcoin are so highly predictable that, you know, anybody can learn it and put it to good use in a matter of hours if you really apply yourself and you understand what to look at. So focus with me. We basically said in the last Bitcoin video that it was going to bounce before ultimately it was going to drop substantially lower. So are we still on track to hit 25, 27K in Bitcoin? Yes, based off historic analog. Let me refresh your memory. It's historic analog. Tomorrow, the 19th, 20th is Sunday. We're about to go for this right here, which is about a 9-day spiral lower in Bitcoin. Now notice, not without stalling out, not without bounces. It's a strong characteristic of Bitcoin to bounce. So don't expect it to just drop. I mean, I know it looks, when you look at this chart now, it looks just a straight drop. But if you're really trading on minute-to-minute basis, on 5-minute, you know, if you're an active trader, guys, I mean, some of these smaller moves, 500 points to the upside, especially if you're trading in the leverage, I mean, they will scare you out of some really good trades. So understand that this is the move that's coming. It's a large size move, and don't get scared out on the bounces. What you should be doing is shorting the bounces. So going back to this situation right here. So Bitcoin basically is what we called tornado pattern, resolves to the downside. Again, not without bounces, right? We can expect a bounce, a drop, a bounce, a drop, but overall, like on a longer time frame chart, it's just going to look like a bigger drop. And the easiest part to short Bitcoin is when all the guys that were getting in right here or adding to positions right here, they're so super excited. They're like, oh my God. Oh, please, somebody post another bullish Bitcoin video. I'm so ready for it to get back up where I was breaking even. I don't know what I was thinking buying it up here. And as soon as it hits here, just trust me, it's not going to be for about a year. Everybody's going to tell you, oh, it's going higher. Oh my God, we're going back to 60,000. I knew it. Study the fucking charts. Click the link below. Okay, don't get overly fucking excited here about Bitcoin moving higher anytime soon. What the history shows, I mean, it could, number one, it can drop a lot more from here. Number two, after it drops, it could bounce and go sideways for quite some time. So don't expect Bitcoin at 60,000. Nowhere fucking soon. Okay, so I just got probably about 100 people unsubscribed. Now that we've gotten that done, let's move to the next chart. Let's see here. Let's talk about Amazon. Amazon is crucial. Amazon is crucial because from one standpoint, you have a highly defined double top formation. And you would think that in almost every instance, you want to go and bet against that formation. But any sort of pullback here, guys, would be a great opportunity to buy because overall, guys, this is sort of a replica of a cup with a handle pattern. And the last few cup with the handle patterns, Amazon has failed, meaning when it tried to break out, it reversed and it dropped. That has been the case with Amazon reported earnings last time. As you can see right here, earnings were perfect. Earnings were great, but the stock dropped almost 500 points within 10 trading sessions. So instead of waiting for this to happen this time, what we want to shoot for is for Amazon to break out higher. Leo, now you got me really fucking confused because I thought you're talking about a market crash. Now you're saying Amazon is going to go higher? What is going on here? So, if you look back at the markets during the COVID crash, which we accurately predicted in our channel before the word COVID was even invented, we've pointed out to the fact that Amazon was going to bounce much faster than a lot of other stocks off the lows, and that's exactly what happened. And this is where your stay-at-home names emerged. And what we're seeing right now is a definitive shift where institutional investors are shifting money from the reopening trades to trades like Amazon and Roku and Netflix and names that typically would be a beneficiary of a COVID-19 crisis. That basically tells us that despite of all the vaccinations, we're heading to, unfortunately, another COVID-19 crisis. As much as I hate that, My job is to trade it, and the ultimate outcome, you want to be long Amazon. Despite of the crash, despite of the markets overall moving lower, there's two subsequent events for Amazon. It's not going to drop by as much as the rest of the market, or while the rest of the market is dropping, as was the case 13 to 15 months ago, Amazon is actually going to move higher. I know it sounds like a paradox. I know it sounds like, well, typically Amazon is highly correlated to S&P 500, but that's not what we've seen today. That's not what we have seen in the last 5 trading sessions. So sometimes your correlations are going to be broken. And in this particular case, if S&P drops lower, Amazon can actually move higher. A lot of these technology names could move higher. And clearly, just observing today's trading session, we can call out a few names. Clearly, the beneficiaries of this next move higher would be stocks like Twilio, okay? Would be stocks like Roku, would be stocks that have been severely beaten down. We've mentioned to our alert subscribers that Zoom was our favorite last week, and we've seen this momentum where it broke out. This was a 20x trade, guys, last week. This week it wasn't as much on the percentage basis, but it was still a good-sized bullish trade. The point is, they're putting the money back in these COVID-19 beneficiary names. So these stocks still have a chance to move higher. As you can see, if I was to draw this out for you, you got a solid pattern that we would describe as a reverse head and shoulder followed with a breakout. Now, clearly, there's some limitations here. There's some definitive levels that the stock needs to break and overcome. But if it does, it can fly. And so is the case with Amazon. So you want to stay long overall and keep buying these COVID-19 beneficiaries on the dip, despite of what the market is doing. The market could be dropping. The market could be going to hell. You want to buy stocks like Roku, Zoom, Amazon on the dip. They are likely to be the sector where a lot of institutional investors are going to place their money next. And the reason why the market may not make a substantial drop is because there is a rotation. So, for example, they'll take money out of stocks like RCL, and they will, I mean, clearly RCL, Jesus, wow, what an ugly chart. Whew. You know, I mean, this is ugly. And so if you listen to a CNBC, what are they talking about? It's the reopening trade, guys. If there is one message that you can take out of this video is short the reopening trade. Short the damn reopening trade. The reopening trade has gotten so far ahead of itself that there is no other way for the reopening trade to go but lower. Everything has been priced in. I mean, imagine there were analysts when we were calling a drop, a bottom in RCL at $22 13 months ago. There were analysts that were still saying RCL could drop more. And now that this shit is up at $85, $90, the same analysts are saying that, oh, it's time to upgrade RCL to a target of $120 plus. Guys, this is not, I mean, this thing is to be shorted. It should be shorted as early as Monday. I mean, any related stocks to RCL, BKNG, any travel stocks, any reopening trade, guys, you should be short of it. That's where the money's flowing out of. The money's flowing out. Guys, this is a straight up Bitcoin chart right here in disguise. I mean, you see this pattern in Bitcoin, you want to short it. I've got a whole course coming up devoted to some easy patterns like this. What do you see next? Well, fuck, good luck. Wake up to BKNG 2 weeks from now at under $2,000. That's what's fixing to happen. You got a major hand and shoulder right here. Okay? You've got the Bitcoin pattern that is the tornado pattern that I've described in some other prior videos. I mean, it's a move lower. You don't have to be a rocket scientist to figure this out. All you have to do is take our charts divergences course, which you can, by the way, right now by clicking the link below, 13mmtv.com. Do it now. But Guys, these trades are easy. But besides understanding the charts, you need to know the strike prices. You need to know a lot of things. So the whole point of this video, not trying to make it 2 hours long, is there is a rotation. Anytime there is a rotation in the market, you're not going to get a 20 or 30% move lower as predicted by some market participants out there. We can get a drop. It's not going to be a huge drop, and the market will still buy the damn dip. That you can be sure of. The most important outcome of this video is, should you be buying the dip now? And the answer is no. It's because of the rotation that the market cannot drop hugely by 20 or 30%. And it's because of the rotation, money flowing out from the reopening stocks to technology and COVID beneficiary stocks again. Okay, it's understanding the rotation that's going to get you paid. It's not understanding by how much something is going to drop. So even though, based on the historic analog, the market can officially drop by as much as 13%, a much better way to play this type of market conditions is to understand where the rotation, where the money flow is going, where the big money is going. You stay with that trade, and that's how you're going to make the money. So if you have questions about specifically which stocks you should trade, guys, click the link below, schedule a 20-minute coaching call, talk to a senior trader here. If you don't want to talk to anybody, that's fine. I mean, sometimes I don't want to talk to anybody. And in that case, you should just go ahead and get the course, study it on your own, and if you have some questions after that, then you should schedule a 20-minute coaching call. With that said, guys, market history points to a move lower in Bitcoin, points to a move lower in the market, and we've nailed the timing. We have nailed the timing of this drop. If you'd like to learn how to nail the timing of such drops in the future history of the stock market, make sure you take advantage of the 13 market moves course that I put together for you. If you're new, subscribe. Don't miss any videos that are coming up. Earnings season is just weeks away. Guys, get ready. It's going to be phenomenally fun and profitable. Get ready to rock with 13 market moves. I'll catch you in the next video soon. Let's roll.